Let's take a look at the stock market for today. We're going to take a look at Brian Shannon analysis first.
It is Thursday the 5th. We're going to look at three markets: the SPY, the Qs, and the semiconductors. On top, we'll have the daily chart, down below a 15-minute time frame. The S&P on the daily time frame continues to be ugly here, and we've yet to test fully that year-to-date anchored VWAP. We've got the 200-day moving average in there as well, and then this 38.2% retracement down near about 417 and a half. Seems as though that could be a level this market heads down to. When we look at the shorter-term time frame below, we've been rejected at the declining orange 5-day moving average, as well as the anchored volume weighted average price from last week's high, that blue one, and the low of last month. So that continues to show us that this market is guilty until proven innocent. And that
So pretty much he's negative or bearish, which a lot of us is, including myself. But just pointing out that on Monday, if you look at his analysis, he was saying short-term wise, because it ended higher or close to, or he was thinking it was going to test this significant level right here on the SPY, which is around 428. He was relatively bullish, and of course, Tuesday it gapped down and went lower. Um, and of course, here we are today. Now, how I do my technical analysis is a lot different. I base mine predominantly on forward-looking analysis. So I would look at the economic data and I would anticipate how the results are. So on Monday, you can see that the PMI was higher, and which is positive um, for at least Monday. And often the way it works because of zero DTE, which is zero data expiration, um, it would end higher or end the day either high of day or low of day. Now, it's not going to happen 100%, but that's the anticipation I normally have. And of course, it ended not high of day, but toward the high of the day at the 15-minute trend line, which is a technical analysis indicator. But then on Tuesday, I was thinking, well, the job opening for August is going to be higher. That was just my anticipation. So I was negative for Tuesday, and then reversal Wednesday is normally when I'm positive, meaning the overall trend would reverse because that's why they call it reversal Wednesday. So you can see on Wednesday, Tuesday obviously went down, and then Wednesday it reverses up. The economic data for Wednesday is this guy, which also why I anticipated a higher Wednesday to the close, because it was a lower number on the ADP report. And then on Thursday, I was expecting a higher number for the jobless claim. Um, Let me see what this is Thursday right here. I was expecting this initial jobless claim to be lower actually, and let's see if it came in lower. Yes, so it came in lower. This initial jobless claim came in lower, which I thought was going to be negative, and it was negative pre market, but then it opened higher, or it opened close to the it opened close toward the high, and it went up. So this was an easy short for me, and of course I was anticipating a higher close because I was bullish intermediate time frame because the initial jobless claim was lower. So on Friday, my anticipation is that this U.S. employment report is going to be lower, so that's going to be bullish in a short time frame. And also looking forward, you can see this PPI. There's nothing on Monday of next week. Tuesday, this is nothing. But on Wednesday, this PPI, and then you have this the Fed minutes, which is going to be negative because the minutes is going to indicate, that the funds, the Fed fund rates are gonna be higher, and there's gonna be less cuts. So that's a negative catalyst. But in the morning it's gonna be, and this is also reversal Wednesday. So what I'm anticipating is a intermediate higher time frame, um, to be able to get up toward maybe 430. Uh, the Tomorrow the QQQ should test the 60-minute trend line. If you look at the MACD, right, the MACD is in the green, or toward the green on the 60 minutes. So the intermediate time frame is obviously, um, so the intermediate time frame is going to be, in the positive, and my expectation is hopefully it's going to eventually test the 430, um, on the SPY, as this descending trend line probably gonna go down to this, and it may even break it and test this Fibonacci at around 432. But you know what? I don't look that far ahead as far as like the targets. That's just where I'm anticipating, forward looking. Now, the data that comes in obviously will change how I analyze things because, for example, if tomorrow results, um, on this non-farm payroll, if it's higher than expected, then we can take a quick look at the the values, right? It's 170K is the forecast. Last month it's 187. So right here, let's take a look at 1 year time frame, right? So this trend is going downward, and of course the forecast is also down. So that being, the expectation, I'm expecting a lower value. But for whatever reason, if it's a higher value, obviously the market is gonna correct, is gonna gap down tomorrow, and then Brian Shannon would be correct in his analysis, in that it'll go toward this level. But that's not how I do my analysis. I don't just blindly say, "Oh, look, this VWAP and this Fibonacci at 417, it's going to happen because the lines match up to that." I just don't do it that way. I anticipate things based on the economic data, and then secondary, it's gonna be the technical analysis or the lines that come about as a result of the economic data. So technical analysis is really what most people like to look at. So we'll go ahead and take a look at it. But you can see this MACD is going higher, or I mean, it's still on the negative side, so it's very bullish or bearish intermediately, and you can see how everything is bearish, right? I mean, it didn't close at the high of the day, whereas on the negative side, it closed, a lot of them, it closed on the low of day. Like here's the low of day, low of day, low of day. This is close to low of day. And this is, well, I mean, it's starting to be less low of day, and then this is not high of day. But tomorrow is option expiration, so very likely it could close low of day, if the results come in negative or bearish. I'm anticipating for it to come in positive, so I'm anticipating this weekly, candle to be, a doji candle, right? I'm anticipating this to be a doji candle, and this um right this candle on the MACD, let's start going green. Well, no, that's next week. So this will still stay red, but next week it'll be a green, which indicates that it'll start going higher. And let's take a look at the SPX, right? So the SPX, again, I'm anticipating this candle to close above 4,300 for tomorrow or for the week, which would be a bullish indication. And if it's bullish because of my forward-looking expectation, meaning the data for next week, being the CPI, and that's on, or the PPI. Normally the CPI is before the PPI, but whatever. This PPI is going to be positive, and then it's going to be negative on the Fed's meeting, and then it'll be positive on the CPI. Consumer sentiment is going to be negative because this is going to be a good consumer sentiment, or at least that's what I'm anticipating. But anyhow, so we're going to have, I'm anticipating some positive, bullish, indications, intermediate, you know, overall, I'm very bearish. So I play things more aggressively on the downside. Like for example, I'm anticipating the Fed's minutes is going to be fairly negative. So this will be something, prior to the number or the release. I'm going to probably buy some puts, before this release, and anticipate that the shorts are going to attack the market on this release, on the release of the minutes. So yeah, so just take a look at, everything right now looks relatively bullish on a intermediate time frame because the MACD has turned green, and you can see this trend line on the QQQ, um, anticipating to get tested tomorrow. The reason why I'm positive on the CPI is you can see the commodity has dropped, so that's gonna be helpful with the CPI and the PPI. Likewise with and I understand food and energy are excluded, but they still, um they're still tied in as far as overall that they have some effect to the core for whatever reason. And of course, the retail number has been weaker, so that's that right. This right here, the retail has been weaker. So, and I'm assuming the housing market, which I don't have on here, but the housing market obviously has been lower, so rents and whatnot will probably. So that's why I am anticipating better results for the CPI and PPI, and also these numbers, this is year to year. That's the key thing, is year to year. So it's comparing last year to this year, which is meaningless in my point of view as far as an economist, because last year was really high. So, I mean, comparing year to year doesn't mean anything, because if last year was really high and this year was, almost as high, well, that's a lower number. But they're anticipating a higher number than last year, but just not too high. So it's going to be a little bit lower than expectation. I don't remember when. Let me see. I think Monday. So we'll take a look at next week. Um, so they haven't had the forecast yet for the PPI and the CPI, but I think on Monday, they're gonna release the forecast, and that forecast for the PPI and CPI. Let's see what this PPI is. The core is 2.2, and the actual value is going to be 3. So I'm anticipating that release number is going to be lower than the forecast, or the previous. I'm sorry, the forecast is going to be lower than the previous, and likewise with both of these numbers will be released probably on Monday. So the CPI and the PPI, the forecast is going to be lower. What's the actual value? Zero point 0.6 is the CPI. 3.7, right? I'm anticipating the forecast is going to be lower than the previous, so that's going to be bullish intermediate, and that's going to line up with a rally. Um, probably toward some of these key tech lines that you see, and that's how technical analysis work, is that the data drives the prices to come, and then they'll start to hit certain key levels like this Fibonacci, this 200-day moving average, and you can see that the IWM, right, it tests this Fibonacci right here, right, and then buyers starts to step in because they're also anticipating, forward looking what's going to happen, right? So they're starting to buy, not because it hits this technical level and they say, oh, it's going to be bullish. No, they are buying in advance of what they anticipate based on forward looking data or what they think is going to come in. So they do similarly what I do, or at least that's what I think. I don't just blindly go through and just say, well, it's going to hit this level. I mean, and ultimately he may be right, but that's just more or less statistical analysis, which is what technical analysis is about, right? Just statistical analysis. What's the chances that it's going to hit this? Um, and we'll let him continue because he'll talk about the Nasdaq next.
Is guilty until proven innocent. The Nasdaq has been a little bit more, a little bit choppier actually in here as it's trying to stabilize near this 5-day moving average. But there's been no buy signal in here. We never made a higher high above a flat to rising 5-day moving average. So for that reason, we've been out of it, and that's a good thing. When we have all this crossing back and forth and showing this uncertainty, it says stay away. It's concerning that we're back below the volume weighted average price for the low this week and up above. The anchor from this low right here seems like that's going to be tested again. I wouldn't be surprised to see a deeper pullback down towards the March anchor, which would bring this down to 347. And the main reason for that is the action in the semiconductors. This has been pretty ugly here as well. We're getting rejected at the anchored volume weighted average price from the April low, that's that green one, and from this high right here in August. So those two come together right at this neckline that we've been talking about, that double-headed head and shoulders pattern. That's the two heads and the two shoulders here. Would imply a move down, well, first to this level. We're likely to test this real soon. And beyond that, there's a greater danger that we could be heading down towards the year-to-date anchored VWAP at about 136.
So yeah, so very bearish analysis, and of course all of us are bearish. So it's easy to just say, oh, it's gonna go down toward, what was he say, 136 level on the semiconductor. So that's all the way, much lower here. But my anticipation is, looking at this right now, it's right at the 60-minute trend line, and it's gonna go up and test this neckline and most likely break it. Um, well, short term it'll break it, but that'll come on Wednesday. I'm anticipating on this PPI results, and then the FOMC minutes is going to bring it lower. So I'm anticipating it's going to break it on Wednesday, and then in the after somewhere, toward that minutes, it's going to start going lower, and then it'll meet again with the 60-minute, most likely break it on the downside. Um, so that's what I'm seeing. Let's take a look at the individual stocks. All of these guys are looking, the big caps, Apple, Microsoft, Nvidia, Tesla. They don't look bad. They don't look bad. Google doesn't look bad. Amazon is right here. So, I mean, it's a mixed bag. It's, Home Depot, so this is lower. So, Home Depot is going lower, meaning most likely the PPI and the CPI is going to be lower. I mean, people are not, I guess, not refurnishing or, doing rentals, or they're not doing real estate as much. So this is going to reduce the pricing pressure on rentals and leases and whatnot. And like I said, the results of these PPI and CPI, these are rather bogus in a sense that it's year to year. And I know people don't look at the CPI; they look at the core. But they're both connected, right? So, like I said, this is what it was last year, right? Let's take a 2 year. This is what it was last year. And year to year, meaning and this is a delta, right? Because these guys are called CPI year to year. So the actual value, let's just say the value is 9 last year. Well, the actual value of this year is actually above 9, but because it's a differential, they're only expecting a 3% differential. So the actual value is like 12, which is lower on the delta because this is year to year, which is bogus. It means absolutely nothing. And on top of that, they really only care about the core. I guess, I know the CPI, inherently or ancillary, whatever, it affects the core as well. But this core is bogus as well. I mean, again, it's month to month, and then you got year to year core as well. I mean, I guess, yeah, the year to year is what they're looking for. And the previous is 4.3. The forecast is gonna come in around 3, and if it's below 3, it's gonna spark a massive rally. So on Thursday, I'm expecting this FMOC minutes is gonna go really low, or it's gonna end toward the low of the day. I know the beginning of the day is gonna end higher. So let's just say by then it's gonna be at somewhere above here, 4,300 on the SPX, and testing this 20-day moving average toward the morning. But then it's gonna go toward the low of the day on the release of the minutes, and then it's gonna break that on Friday or Thursday, right? Yeah, yeah. On Thursday it's gonna break it, and then Friday. I think Friday you gotta have the consumer sentiment, so this is going to be a negative. So yeah, so expect more chop for next week, but that's how I do my technical analysis.